Nifty 50 and Sensex are off their lows of 5% when the markets opened this morning. Now down about 3.2% or so on the Nifty 50 benchmark. Sensex is down about 3%. Remember, Sensex had lost almost close to 3,000 points in early trade. We are seeing a little bit of a recovery. Even the volatility has ebbed a little bit, down about 19.98. You can say about 20 levels or so. Some recovery in the small cap space. Remember, small caps had opened more than 10% down. There's a bit of a recovery that we are seeing. Small caps on your screen right now down about 4.7% or so. The story is not just limited to the bloodbath on emerging markets, Asian markets, which are falling out as a consequence of the whiplash of Trump tariffs in the US stock markets. It is also seen in European markets this morning. Look at the German index, the DAX, which is also all the way in the red this morning. Big IT companies like S&P, which look at clients in the US, this stock is down about 3.5%. And look at the banking stock, the finance stock coming in. The Deutsche Bank in Germany is down about 10% or so. Even the product manufacturers, Siemens, the electronics maker Siemens, is down about 6% in trade on the last closing day. And battery maker BASF is down about 4.5%, perhaps reeling under pressure from what was really going on with the auto sector and the tariffs imposed on the auto sector. Meanwhile, let's cut back to the Indian stocks. A bit of a recovery, but stocks like Tata Motors and the entire IT pack reeling under tremendous pressure. The story on energy stocks also this morning not looking good. We told Kranthi Bathini is now with us. Kranthi, good morning. What a day to have you here with us. A kind of decline in the markets this morning like we've never seen in the last 5 years. This takes me back to COVID-19 days and the horrors of March 2020, now pretty much rearing their ugly head here in April 2025, 5 years later. How do you see the mood of the markets from here on, Kranthi?
Yeah, Kartik, you defined in a right way. Your statement is absolutely correct. Okay, it's a very unprecedented sell-off. It's look like the COVID crisis, but COVID it was not by and large. It's not man-made. It's a pandemic, but this time it's a completely man-made. Okay, the the tariff wars are started by man. Okay, and the crises are man-made at this point of time, and it's a complete global rout and a complete sell-off across the globe. There is no place to hide in the market at this point of time. All the investment avenues, it can be gold was down last couple of days. The commodities are down. So the complete negative sentiment is hovering around the globe in terms of the investment avenues are concerned. So the point to ponder upon at this point of time, it's completely unprecedented. One need to be a little bit cautious at this point of time in terms of moving their coins at this point of time. But one thing is the domestic centric sectors in India. It can be the railways, it can be the consumption theme in India. It is intact. So it's a good opportunity. The crisis would be there for some time, but somewhere, since, as I mentioned, it is man-made, so it can be corrected. So the market has been waiting for the corrective phase, but it seems to be the U.S. administration is a little bit indifferent at this point of time. They were proactive to handle the COVID crisis, but this point of time, since the crisis are started by them, they are a little bit indifferent at this point of time. They are in a wait and watch mode to make the corrective steps at this point of time. That's where the global sell-off is getting triggering, and we are experiencing the worst in the markets.
Right, Kranthi. But you're saying this is a man-made crisis. There's absolutely no two ways about it, no second thoughts. It is a man-made crisis. But the point is the man going to man up and correct this crisis? Because the stand that Donald Trump seems to be taking right now is that, hey, this is going to be a rough ride for a small period of time. But after that, the going is going to be great. If I remember him saying, and I can quote him, it's going to be amazing. I mean, if this is the start of amazing, then it obviously instills a lot of fear in investors who are holding on to their investments, not knowing whether even this is the bottom or there's a deeper pit that they are likely to fall into.
Absolutely, Karthik. Absolutely. See, in terms of the handling 2008 crisis, the Obama administration was completely failed. By the time they were delayed to take the corrective measures, the damage happened, and the U.S. Experienced 2000 great financial crisis for more time. For a simple delay of some 48 to 36 hours delay, the damage happened. The same thing, it can be there, it can be there. There might be a burning, but yeah, if there is the scars will be there for more time. That's what the US administration has to identify. I don't know who are the advisors for Donald Trump leading him at this point of time, but the US Treasury and the US State Finance Department and all the advisors to him as to guide him in a right way to avoid this crisis. Of course, we are already in the crisis, but they need to take very aggressive preventive steps to stop the further damage.
Right. So, Kranthi, just help me understand, take a few steps back and explain to our viewers. Now, with these tariffs, inflation in US obviously going to skyrocket. Some economists are estimating the impact to be as high as 20 to 30% on everything that the US consumes. So that is not going to allow the US Fed to cut interest rates anytime soon, and that seems to be the stand that Fed Chair Jerome Powell is also taking. But India commences its monetary policy meet today. India's inflation numbers so far seem all right. Now, if RBI Governor Sanjay Malhotra goes ahead and cuts repo rate by 25 basis points, and that is the estimate right now, that means even debt-based investments, fixed deposits, etc., as an alternative to stock market investments become less lucrative for Indians. So what does the Indian investor, retail investor do? There are also reports, Kranthi, that gold prices would correct, and some reports estimating that they could correct sharply and come down to maybe 56, 57,000 levels. So people who have invested in safe haven assets like gold also now sitting on the edge. Like you said, there's no way to run, there's no way to hide. What does the investor do from here?
Karthik, there are ripple effects. The point, everything is interconnected. The US inflation and related to the Fed action, and coming back in India, the inflation is cooling off a little bit, but RBI have the headroom to reduce the interest rates further, because we are not a zero interest rate regime. RBI always maintained a very tight, strong monetary policy. So the impact for the India's fixed income also, it can be nominal, by and large, when we compare the things at this point of time. By and large, right now, the RBI focus should be to give the elbow to growth. That's where the RBI stand at this point of time. But coming back to US, it's a double whammy. It's connected to every link. That's what the crises are at this point of time in US. Every measure, it's too late at this point of time. They have taken a unilateral move, and the administration in US is facing the heat and the overheat. They might giving a feeling that everything is perfect, everything is right, they are on the track,
Yeah.
but they are not on the track. These are the unprecedented moments for the US administration at this point of time, because it always said in the history, the politicians and policymakers never accept their mistakes, but they have to pay the price.
Yeah, you're right. But here we are talking about a politician who has been in the business of running business and real estate, no less. And something like this, or something as significant as this market rout, high inflation, stagflation, perhaps recession escaping his attention, is something that that at least to many people, Kranthi, was unexpected. Well, we will continue with this discussion. Stay with us, Kranthi.
Karthik, on a lighter note, if we make any comments, you and me don't get the visa next time if we are traveling to US.
Well, I'm not sure anybody, given what is likely to happen in the US, the inflation and recession, would be keen to travel to the US, Kranthi. I mean, there would be some who will buy that Trump imprinted gold cards, and he's proudly holding those out, but those are going to be few and far in between. I really wonder, with this entire manufacturing push, make America great again, where is the labor going to come from? Because at the other end, you're also deporting cheap labor which is available in the US.
Yeah, absolutely, Karthik, absolutely. It is completely unprecedented and unwarranted.
We will continue with this discussion. We told you that China is hitting back with tariffs on the US, but that seems to be the story even from the European Union. The EU is gearing up to push back against US President Donald Trump's new tariffs in a show of unity. EU countries are expected to approve a first wave of targeted countermeasures in coming days, covering up to $28 billion worth of US imports. More details and other such issues, from dental floss to diamonds, coming up in this story.
European Union countries will look to present a united front against U.S. President Donald Trump's tariffs, likely approving retaliatory tariffs on up to $28 billion of U.S. imports. The move, expected in the coming days, would tax a range of U.S. goods, from dental floss to diamonds. By doing so, the EU would join China and Canada in imposing retaliatory tariffs, potentially escalating a global trade war that could make goods more expensive for billions of consumers and push economies around the world into recession. The 27-nation bloc faces 25% import tariffs on steel, aluminum, and cars, and as of last week, reciprocal tariffs of 20% for almost all other goods. Trump's tariffs cover some 70% of the EU's exports to the U.S., which last year were worth a total of $585 billion. U.S. duties on copper, pharmaceuticals, semiconductors, and timber from the EU are likely still to come. The European Commission, which coordinates EU trade policy, will on Monday propose a list of U.S. products to hit with extra duties in response to Trump's steel and aluminum tariffs. But among EU members, there are differing opinions on how to respond. France has said the EU should work on a package going well beyond tariffs, with President Emmanuel Macron suggesting European companies suspend investments in the U.S. until, quote, things are clarified. Ireland, almost a third of whose exports go to the U.S., has called for a considered and measured response. And Italy, the EU's third largest exporter to the U.S., has questioned whether the EU should hit back at all. The initial EU counter-tariffs will be put to a vote on Wednesday.
All right, so EU also contemplating hitting back, but some sort of a difference of opinion in member nations. Meanwhile, like we told you, China has already hit back with retaliatory tariffs on the US, but no official word from the government of India just as yet on whether India is also thinking on the lines of retaliating or not. Kranthi Bathini continues to be with us. Kranthi, the kind of sell-off that we are seeing in the market today, look at the screen right now. It is completely red. Like you and I have been mentioning, this is pretty much looking like a man-made repeat of a potentially non-man-made COVID-19 5 years ago. But what we are really looking at is disaster in the making. Sensex is down almost 3,000 points right now. The Sensex, the Nifty futures is also taking a beating, Kranthi. And what we saw in Japan and South Korea this morning was this lower circuit being hit on futures. How do you think the Indian markets are going to go from here, especially those who are invested in the F&O space?
Kartik, in terms of the F&O space is concerned, it's speculative and the stakes and the risk appetite is very much high. So at this point of time, markets are in a completely sell-off mode. But by and large, what I can sense at this point of time is Indian market is I can't say it's completely insulated, but the global tremors have been impacting the Indian markets. But by and large, we are at a right stage at this point of time, despite of the global sentiment has been negative. But by and large, there would be a quick recovery can be expected once the dust gets settled. But when is the greater question? But we are by and large at a recovery phase. We can expect a quick recovery in India.
All right. But Kranthi, help us understand in this entire debate about coupling or decoupling with the US wanting to sort of isolate its own economy and not really care much about what is going to happen to the rest of the world. In that sort of a narrative and that sort of a scenario playing out, how much of an impact of US stocks continue to reel Indian stock markets? Will that coupling continue for the foreseeable future until India is able to forge perhaps other partnerships, bilateral or free trade agreements with other countries? Or do you think US is going to continue to be central to India and to Asia no matter what the narrative on tariffs is?
Karthik, we need to devise your question into two parts. One is in terms of the trade is concerned, by and large, the impact would be very less in terms of the trade. Over a period of time, the Indian administration is going to have a consensus view. There would be negotiations. Coming to the market, the capital markets are concerned. We may say we are decoupled, but we always, in terms of the capital flows are concerned, we are recoupled, and the global sentiment is concerned, we are always recoupled with the global sentiment. When there is a global route, definitely there will not be any exception. We have to sell because in terms of the market sentiment is concerned, by and large, we have to face that heat because of the entire global route is concerned. We have to get prepared. That's where the stock market investments always have these kind of market forces that drives. One need to be prepared for that. But in terms of the trade is concerned, consensus can be arrived, and the businesses can be decoupled in terms of the trade is concerned. But in terms of the capital flows and the global market sentiment is concerned, one has to face this thing. But over a period of time, market will realize the value. As always, John Keynes always quotes, market can be irrational as long as the investors are solvent. So one need to prepare. That's what the equity risk forces are.
Kranthi, now one final question to you, and this is with respect to foreign capital. And you're saying that capital markets will continue to be coupled and interrelated. So the question really is that we've seen the kind of route playing out in the US where the S&P 500, the Nasdaq are down more than 6%, almost 6% or so. We've seen the markets in Japan and Korea tanking in excess of about 7% on Japan. Indian markets are still down about 4%. So is India and Indian capital markets taking it a little better? Are investors likely to be more focused on India, even in the emerging market space? If capital money and if foreign money has to flow across the world, then are they going to look at the US markets and other Asian markets with a greater degree of skepticism as they would look at India? Because India, despite this massive fall that we are seeing today, is still performing better than other markets that we got on the screen some time back.
Yeah, Kartik, by and large, we are insulated in terms of the consumption is concerned, in terms of the trade is concerned. So that is the reason the impact is there on Indian market, but the ferocity still, when compared to the global peers, the ferocity and the volatility is in terms of the comparison, we are better than them. But still, we have to play the steps as per the global music.
All right.